Good afternoon. Welcome to another edition of Crypto Buzz by Kalkine TV. Sage here. So inflation's still trending, with it being a highly searched word by Australians, according to Google Analytics. If Australia's inflation of 5.1% or the USA's inflation of about 8% were not enough to entirely spook you, the Eurozone inflation, as measured by producer prices, has surged to 36.8%. And there are expectations that this will sprawl into the US and other regions with time, according to Waste Ratings. The macroeconomic factors are still creating a huge amount of FUD, fear, uncertainty and doubt in the markets, with NASDAQ dropping about 9% over the last month. So what inflation ultimately does is it devalues the intrinsic value of currency, and most investors want to know if the US Fed will be successful at curbing inflation, with the anticipation of rate hikes to eventually reach 3% by the end of 2022. The Chinese government decided to relax the regulations on their tech stocks last week, which saw the big names like Meituan and Tencent all rise significantly at the end of last week. But how will the new rules of using only Chinese computers impact the bourse, I wonder? And Bitcoin and crypto markets in general are less and less operating in a separate universe to the traditional financial markets, with somewhat of a correlation being evident between crypto and the tech stocks. The energy stocks have been leading the sell-off route this time round. Despite the drop, the S&P 500 Energy Index is still 40% up year to date. However, lacking the same buoyancy, the S&P 500 is experiencing the selling pressure, with a drop of 15% for the same time period. Looking ahead, as we hopefully will see the sentiment stabilise and the selling pressure ease, the energy sector could lead the way higher and maybe even lead Wall Street, with the strong fundamentals in the environment around commodity prices. So have the bears caught hold of the reins of the crypto sector, and are there any salmon swimming in the stream for the bears to feed on? Well, in today's show, we'll investigate into the price of Bitcoin as well as use cases and how they can help to keep a crypto's price up even when the market's going down. So keep watching till the end. Bitcoin's price decreased overnight as the largest cryptocurrency by market cap continues to experience severe risk-off selling against the volatile market fundamentals. The regulatory headwinds are in action, with the US Fed ensuing more investigation into the sector, with the Bitcoin USD trading pair being 50% off the all-time high levels of November 2021, when the price of Bitcoin was $69,000, which marks this as the heaviest drawdown since mid-2021 in June. Now, the focus is on whether the price of Bitcoin will sink below $30,000, which it has done just before noon in Sydney today, when it reached about $29,996.56 US, until it went back up quite quickly to 31,000 or thereabouts. The consequential level that could skew the long-term bullish outlook for Bitcoin is around the 28,800 level. And if the price of Bitcoin breaches this level, the downtrend would be confirmed, and a consolidation on various timeframes could then indicate a push further down to even as low as 20,000 or 17,000. This would mean the current price of Bitcoin would be slashed by 40%, and this information is according to FX Street. Now, the last time Bitcoin's price reached these levels was late 2020 and early 2021. The price of Bitcoin is down about 7.1% in the last 24 hours, being at about 31,153 at the time of writing this report during the Asian mid-session. And over the last 30 days, it's down about 27.9%, and over the last 12 months, it's down 47%. That's data taken from CoinGecko. However, in comparison to gold as a hedge against inflation, Bitcoin and Ethereum are still ahead. To give you an example, gold is 1.5% inflationary, however, Bitcoin is 0% inflationary over the long term, and Ethereum is negative 4% inflationary, and that's why it's thought of as ultrasound money, where the more Ethereum is burnt, the higher the implicit value of Ethereum for the holders overall, according to Ryan and David from their Bankless YouTube masterclass on the $1 trillion L2 opportunities. Now, Ethereum's price is down today about 4.4%. at $2,333 or thereabouts. Over the last 30 days, it's down by 28.3%. And over the last 12 months, it is down by 40.5%, also according to CoinGecko. We've now reached the time for a short break, but we'll be back with more information on the crypto Axel and Tron. So please stay with us.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Calkine TV.
Welcome back to the Crypto Buzz by Calkine TV. Sage here, and I'm not sure if a good case could allow crypto to maintain some clout during a sell-off we're experiencing, but many crypto investors seek havens and DeFi lending platforms that allow users to borrow crypto to trade with leverage, securitized on their existing crypto holdings and on-chain stablecoin availability, demand and liquidity, such as Tron's new USDD stablecoin that has created a lot of traction for the protocol that has been trading up 14% this week according to CoinMarketCap. You can check out Calkine Media's video on Tron stablecoin on YouTube. Today, the price of Tron is down 8.7% at $0.077424. Over the last 30 days, it's up 21%. And over the last 12 months, it's down 46% according to CoinGecko. Axel.network's price is up today, 25.7% at the time of writing this report during the Asian mid-session, and that was at $0.1734. Over the last 30 days, it is down 1.1%, and over the last 12 months, it's down 44.5% according to CoinGecko. But a little info on Axel. Axel calls itself a content distribution network, or CDN, from the grassroots through the use of distributed ledger technologies. It democratizes user-generated content and creates a more decentralized content creation sector. The internet users' data will be revolutionized through this network with its free and private file sharing. You can find out more about this protocol from checking out their website. So to finish off the show, let's look at play-to-earn games. Founded in Sydney, there's Illuvium.io, and they have announced an exciting land sale on their platform. And according to their press release, this will take place on the 2nd of June with 20,000 plots available on the first in best dressed Dutch auction. They have emphasised that if you are keen to play this well-calibrated and enticingly attractive-looking game, fuel is critical to your success as a player, and fuel can only be extracted from the virtual land on the platform. So NFT games have added to the mass adoption of cryptocurrency globally last year, and now there are about 10 new play-to-earn games being created every week. So there will be plenty of choice for those interested to try their luck and hopefully learn something about themselves through engaging with these often adventurous and tactful games. Illuvium are hoping to have 1 million players on the game before too long. For some information or to find out more, head to their website. And thanks for joining us for today's edition of Crypto Buzz. As always, this is not financial advice in any way, but is for informational purposes. Please do your own research and due diligence before you begin investing in the digital assets, including how market cap and daily trading volume impact your choice of trades in the DeFi system. It can vary from protocol to protocol. So keep watching for more live expert talks and market insights. Until the next episode, may the hodling continue.